Bitcoin hit a record high of $100,000 during trading this week. The cryptocurrency continued its rally following the election, as more buzz emerged that the incoming Trump administration would bring a crypto-friendly policy. Despite naysayers, Bitcoin and the digital asset industry appear to be on the verge of entering mainstream acceptance. With that in mind, what does the future hold for blockchain and other cryptocurrency trends? What's next for the crypto world? The cryptocurrency world continues to capture the attention and imagination of investors, observers, and regulators alike. A decade after Bitcoin and other cryptocurrencies first burst onto the scene, they have grown from digital novelties into trillion-dollar technologies that are capable of disrupting financial markets and transforming the way we do business. To proponents, cryptocurrencies empower consumers by giving them control over their money and wresting power away from central banks and Wall Street. To critics, cryptocurrencies fuel fraud and criminal activity, cause extreme price volatility, and consume huge amounts of energy. Bitcoin and the broader crypto world began 2021 with a bang, climbing from just above $6,000 at the start of the year to nearly $18,000 by late March, as rising inflation and a central bank intent on thwarting it drove investors into risky assets. After bouncing around the $20,000 mark, however, prices fell sharply in early 2022 as the Fed began to raise interest rates and high-profile blow-ups like FTX sent traders running for the exits. However, things started to look up as the summer rolled in. The SEC finally approved a few Bitcoin-holding ETF funds, encouraging brokers to swoop in and increase their holdings. In addition, the market began to see the approval of several inverse ETFs, allowing investors to short the crypto world and profit from its downturn. As we enter the spring of 2024, Bitcoin has regained its footing and reached new highs. The currency traded above $100,000 on some exchanges this weekend, and some are predicting that it will soon break through $1 million. While many still see a large gap between the crypto world and mainstream finance, it is clear that the industry has matured enough to attract significant investment from traditional institutions. Banks that have resisted embracing Web3 have now begun to shift course, and it will be interesting to see what happens when the long-awaited IPOs begin trading next year. Investors are also waiting for more clarity on government regulation, which could greatly impact the crypto world. Some investors believe greater oversight will legitimize the marketplace, while others fear that it could limit the peer-to-peer nature that drew them in initially. The SEC's clarity in a move that shocked many in the industry, SEC Chairman Gary Gensler announced last month that his agency will continue to pursue enforcement actions against firms that offer illegal securities in digital currencies. The decision was made even as the SEC announced a reshuffling of its leadership, bringing in new leaders who are presumably more sympathetic to the crypto market. Despite the recent SEC-related concerns, cryptocurrency investors have reacted with relief to developments that should encourage friendlier regulatory efforts. The market cheered news that President-elect Donald Trump has nominated libertarian and former regulator Paul Atkins to replace Gensler as the new leader of the SEC. Atkins is widely viewed as pro-crypto and co-chairs the Chamber of Digital Commerce. S-Token Alliance, an industry-led initiative to represent the sector. The SEC has already been speaking with a clear voice regarding Bitcoin and the crypto market in various ways, including in regulatory pronouncements like the July 2017 Dow 21A SEC report of investigation, administrative directives such as the December 2017 Munchie Administrative Order, and dozens of SEC cryptocurrency-related enforcement actions that have been litigated in district courts across the country. These actions speak volumes about the SEC's intentions with regard to cryptocurrency and its need for transparency, notice, and disclosure when it comes to the nascent marketplace. A spokesman for the SEC said he was unconvinced by claims of insufficient clarity about how the agency will enforce its securities laws with regard to virtual currencies, noting that existing laws do not just disappear when a new technology emerges. He also emphasized that the SEC continues to have an active enforcement program in place to protect investors and to stop fraud, which can occur when the marketplace lacks transparency and oversight. The SEC recently took a step toward addressing investor concerns about the crypto marketplace by filing its first civil complaint against a law firm for failing to properly disclose its relationships with crypto-related entities. The lawsuit filed by crypto-focused law firm Hodl Law PLLC against the New York-based Milbank LLP is the latest in a string of enforcement actions the SEC has launched against law firms that are representing clients in unregistered securities offerings and other securities matters. Brands jumping into the market. Brands in the technology and financial services industries are hopping onto the cryptocurrency bandwagon. They see the potential for cryptocurrencies to transform global markets. They also recognize that the crypto market is volatile and that it can go from skyrocketing to tanking in a matter of minutes. They are launching investment funds and developing platforms to support crypto investments. They are building trust in the industry by serving as trusted guides, educators, and safety nets. Cryptocurrencies are attracting new investors because of their decentralized nature. They can be transferred quickly and easily, even across borders, without the involvement of a bank that may block a transaction or charge a fee. This makes them popular for people who believe that decentralization can bring more financial freedom. They are also used by dissidents in authoritarian countries to avoid sanctions. But despite their popularity, it is impossible to say whether cryptocurrency will be the future of finance. One of the biggest challenges for the cryptocurrency world is how to regulate it. Some investors worry that regulation could limit the peer-to-peer marketplace that initially drew them in. Others fear that regulation will increase volatility and criminal activity. Still, other investors want the added security that regulation provides. The Bitcoin price has surpassed $100,000 and the value of other cryptos has also risen. Some of this growth is due to the approval of a spot ETF, which has buoyed inflows. Investors are also excited about the upcoming halving event, which will cause the supply of new coins to decrease by half. Some experts expect this to drive the price of Bitcoin up significantly in the next 6 months. As the market grows, it is becoming more important for brands to develop products that can be used with cryptocurrencies. For example, Facebook recently introduced its Libra crypto platform to simplify international payments and eliminate unnecessary fees. But Professor Grunfest thinks that this approach is flawed because it does not address the fundamental issues behind the high cost of transactions. Aside from providing products for transferring money, some brands are also developing blockchain-based software that will make it easier for businesses to incorporate crypto into their operations. This will allow them to streamline transactions, reduce costs, and speed up processing times. It is expected that this will be a significant driver for the crypto market in 2025, especially when it comes to remittances and global payments. The future of cryptocurrency is bright, but it will be shaped by regulatory clarity, industry development, and mainstream adoption. Those who embrace it with knowledge and caution will be able to reap the rewards and contribute to a more interconnected, efficient, and inclusive financial ecosystem. Bitcoin was created out of a desire to shake up the exclusive, institutionalized world of finance and create a new way for anyone, anywhere to move money and buy goods or services, regardless of their individual circumstances. However, in recent years, the crypto market has been increasingly dominated by institutional investors with deep pockets and huge resources. In many ways, this shift is a good thing as more investment means more opportunities for ordinary people to get involved, but it also threatens the cryptocurrency's ability to operate outside of traditional finance. As the market continues to mature, brands can expect regulation to increase, both from governments and within the private sector. This shouldn't be a bad thing as it will bring safeguards for consumers, and help establish minimum standards that all crypto businesses must meet in order to trade. In addition to regulations, brand influence will be key to the future of cryptocurrency. Established companies will be able to fill the gaps left by government regulators and provide education and support for intenders looking to invest in crypto. This could be as simple as facilitating trades in a comfortable and safe environment, or providing easy-to-understand content for intenders who are exploring the market. As the popularity of cryptocurrencies grows, they will continue to evolve into more than just digital novelties. They will become a powerful tool for storing value and making payments, transforming the global economy. And while some governments may still struggle to accept them, they will have no choice but to integrate them into their systems if they want to stay competitive on the global stage.